Now, we have been getting a slew of data over the past couple of days. It's like counting raindrops or trying to drink from a fire hose right here. So I'm going to make you all drink from that fire hose with me. Welcome back to the 𝗪𝗚𝗀𝗆's Daily Podcast of the Day, apes. Thank you all so much for joining us here on this beautiful Wednesday, September 25th, 2024. It is currently 7:15 p.m. in the evening, and we got a lot to talk about here today. Not a whole lot moving markets on the session outside of the housing market. There weren't any major macro kind of data releases here today, but we certainly saw a whole lot of movement. The WSO Alpha portfolio, this is our proprietary portfolio here at Wall Street Oasis. Relatively rough day. We were down about 35 basis points on the session. Pretty much every other one of these index was completely flexing on us, and somebody's 100% getting fired after this because holy shit, how are we down more than the fucking S&P 500? That's pathetic. Beating the SP is one of the easiest things I've ever done in my life. So probably I'm going to be firing that entire team, sending your applications to David@WallStreetOasis.com. The S&P 500 on the session was down 19 basis points, whereas the NASDAQ managed to eke out a gain of about 0.4 basis points, thanks to a strong day from our AI daddies in NVIDIA and Microsoft. Microsoft was up a very nice 69 basis points on the session, whereas NVIDIA was up 2.18%. Great day for them. We also saw strong performance from Tesla and other names that are kind of more heavily weighted in the NASDAQ and the NASDAQ 100 especially than they are in the S&P 500. Meanwhile, the Russell 2000 was down about 1.56%. Super easy to beat small caps, but, you know, today, like I said, there was no real major kind of macro market movers for the session here today. So it was very much a stock picker's market once again. All you future Warren Buffetts of the world must have had a field day over that. Let us know what you're investing in, by the way. Shoot me a message. I'm always looking for tips, and I would love to tell you how dumb or how great your ideas are, and then probably steal them and pawn them off as my own. Shoot me a message, David@WallStreetOasis.com. I love getting emails from you guys. It's always, you know, I want to get some stuff that we can talk about here too, so that we can increase the engagement a little bit. So shoot me a message, even if it's just to say hi. Maybe I'll give you a shout out. Not that anybody cares as well, but just to wrap this up, the Dow was down 70 basis points on this session. So some underperformance from the WSO Alpha portfolio compared to the indexes that actually matter, being the NASDAQ and the S&P 500. But, you know, still managed to outperform the Russell 2000, but that's literally a joke, so it's not really anything to be too proud of. Okay, let's get into some of these banana bits, and these are, of course, the stories that we wanted to bring to your attention, didn't care enough about to write about today, but we're definitely going to be writing about some of these going forward, especially when you're talking about $100 billion. Now, $100 billion, that is exactly what Vice President and Democrat nominee Kamala Harris announced as part of her economic plan today. She wants to invest $100 billion in subsidies for the U.S. manufacturing industry. Now, this is politically related, but when you're talking about $100 billion, you have my attention. So we'll probably be breaking down exactly how that would work over the next couple of days. Now, you know, we don't get political here at the Peel. We try to stay as far away from that as possible. But, you know, like I said, with $100 billion, it's kind of something that we're not going to be able to avoid. Even though realistically, in the past 3.5 years, this is probably something that we could have been writing about that has actually happened. But again, this is kind of, you know, what's the word for it? Dragging your feet, I guess. Just not doing anything over the past 3.5 years or any time that you were in the Senate. But I digress. We don't get political here at the Peel. So let's go ahead and move on to the next story. Oh, great. This one's fucking politics too. The House of Representatives just bought the United States another couple of months before we officially run out of cash. Not that we really have any money at the beginning with anyway. It's about $33 trillion in total federal debt. But fuck it, let's go ahead and add some more. The House of Representatives just bought the United States another couple of months before we officially shut down the government. They did just pass a kind of stopgap spending bill that will run through until December. You've seen quite a lot of these over the past couple of years and really over the past couple of decades because Congress has decided to start going with omnibus bills and try to get all spending everything in just one bill, even though we can't agree on, you know, how much we're going to tip the waitress after going out to dinner or something like that. But nonetheless, this is kind of like the epitome of government incompetence right here, is the fact that we still have to keep going with all these different stopgap funding bills instead of just voting on all of this spending separately like we used to in the glory days. But nonetheless, I digress because that is politics, so let's go ahead and stop talking about it. Meanwhile, Zuckerberg, this is something else that's interesting going on this week, the Meta Connect conference. This is kind of like Meta's version of the WWDC. It's where they release new hardware, new software, kind of get everybody fired up. Yesterday, they announced a new version of their Oculus VR headset, birth control kind of things. I mean, that's really the main purpose of this stuff, right? It's got to be more effective than condoms at the very least. But nonetheless, they did just announce a new kind of Oculus headset that's going to be available going forward. Meanwhile, OpenAI CTO 𝗪𝗏𝗻𝗀𝗀. Now, you might remember this name because she was one of the people who kind of led the charge against Sam Altman and got him ousted, what was that, over a year ago at this point? Or I forget when exactly that happened. It's all kind of a bit of a blur. She is also the one who, in that interview, kind of gave a dead giveaway that the company was training its Sora AI video production tool on YouTube videos. She didn't exactly say that, but if you read between the lines, that's, certainly what she was hinting towards. Meanwhile, LinkedIn is absolutely popping off lately. I don't know what has gotten into these company executives and CEOs, but they are humbled and honored to have LinkedIn as a place to go ahead and induce cringe among all those unfortunate enough to see their posts. So LinkedIn is absolutely blowing up with the amount of attention and the written stuff that CEOs and executives are publishing on the platform. Meanwhile, finishing up with a story from one of our absolute favorite media outlets, Sherwood News. They're breaking down the freaky finances of the WNBA. It was easily the WNBA's best season in its history on both a viewership, arguably a play perspective, and also from a financial perspective, and the organization is still losing a shit ton of money. So they break down exactly why in that Sherwood News article. Speaking of articles, let's go ahead and get into our big story of the day. For Macro Monkey today, we are talking slowly but surely. Now, I don't exactly talk very slowly, but the housing market sure moves pretty slowly, and it's only getting slower from this point forward. Now, currently, most of you know this if you've been, if you're a loyal ape, you know this, but I just bought a house a little bit more than a month ago. At this point, I probably could burn the place down and collect a very nice check from the insurance company with no questions asked. It's kind of past that period of okay, you just committed arson. This is obviously for insurance fraud. As somebody who's committed arson in the past that nobody really knows about, and certainly hope they don't know about after this, my expertise kind of tells me that I probably could get away with it. But either way, because I just said it publicly, that's probably out the window. Still, maybe that's a good thing because there's absolutely nothing that would get me out of my, little house that's very far from the prairie and get me back into the absolute hell that is the housing market right now. Now, we have been getting a slew of data over the past couple of days. It's like counting raindrops or trying to drink from a fire hose right here. So I'm going to make you all drink from that fire hose with me. Let's go over some of the biggest data. So yesterday, well, really today, but you're going to see this tomorrow. So I'll say yesterday, the U.S. Census Bureau and the Department of Housing and Urban Development, aka HUD, released their latest data on new home sales in August. So this is newly constructed units that are getting sold. And like most reports from the government, or like most things that governments do, it was relatively disappointing. On an annualized and seasonally adjusted basis, new single-family homes slipped 4.6% from July to August, but they actually increased 9.8% from August of 2023 until August of this year. So the increase in activity on an annual basis is great, but it really more so speaks to the weakness of August 2023 and not any strength that you're going to find in the market here in 2024. The median sale price of these homes increased a little bit as well to $420,000, basically $420,600, whereas the average selling price was $492,700. So obviously the average is going to be a little bit higher because there's really no limit, whereas the lower end has a limit to a certain degree. So obviously that makes sense, but we're seeing slight increases in the prices on new home sales on both a monthly and an annual basis. We're also seeing an increase in supply. So the supply of new homes in the United States increased from 7.3 months in July to 7.8 months at the current rate of sales in August. So as a kind of a recap there, new home sales are down on a monthly basis, up on an annual basis. We're seeing prices increase, and we're also seeing supply increase at the same time. Now, just a couple of days prior, we also got the same data for existing homes. Sales of existing homes declined 2.5% monthly and 4.2% on an annual basis in August, despite my best efforts to pump those numbers. This is an existing home. I know you guys can't see it right now, but trust me, if you could see it, you would absolutely know immediately that this is definitely not new. Especially with my dog running around on a fucking mission to get this place as dirty as it possibly can be. The median sale price of those homes increased about 3.1%. This is the 14th month in a row of non-stop gains. I would absolutely kill somebody if the apes at WSO Alpha could fucking do that for our portfolio, but fuck them, they're all getting fired anyway. The inventory also increased, rising slightly to about 4.2 months worth of supply, about 1.35 million units. So that's a rough improvement of about 7 basis points, or 70 basis points, about 0.7%. So once again, we're seeing between both of these reports continued declines in activity on both a monthly and an annual basis, besides, a brief uptick in that of new home sales. We're seeing some supply increases. That's positive data for anybody that wants to be a home buyer going forward. Yet, despite these best efforts, depressed activity, so that means lower demand, and we're also seeing increases in supply. Despite this, prices are still increasing, at least according to S&P Case-Shiller Core Logic Home Price Index, whatever the fuck this alphabet soup of an index is saying here. They're seeing, once again, this is the 14th month in a row of record new all-time highs being set. Now, the good thing is prices were only up 5% year over year in July, because S&P Case-Shiller, they're a little slow, so they take their time to count this data. Up 5% in July, that's a slowdown from the 5.5% that was observed in June, but still setting all-time record highs and fucking over you wannabe home buyers. God, can't imagine not having a home. I mean, Jesus Christ, what are you, just in poverty? I'm just kidding. I don't mean to sound like that much of a dickhead. But either way, a more updated report from Redfin showed similar trends. Now, the Redfin report for August home prices did show that there could be a slight decline from the July to August period. Now, they still increased about 3.2% annually, and any decline that was registered on a monthly basis is going to be less than 1%, so it's really non-tangible, and that's why we didn't really mention it here. Now, on the day as well, we also got an earnings report from one of the nation's largest home builders. It's either the 6th or 7th largest builder, KB Homes. Now, an interesting thing about KB Homes is they're not like some of these just housing manufacturers that we would see in names like like fucking Lennar or like DR Horton or something like that. KB Homes is heavily weighted to custom-built homes. So they're very heavily weighted to the upper end of the wealth and income spectrum. Now, the market did not like their earnings report whatsoever, despite the fact that they reported 10% revenue growth on an 8% increase in deliveries, which implies that you're getting higher prices. They saw a 3% rise in average sales price as well, so math definitely checks out there. But at the same time, there were some interesting comments made by the CEO. So he did say that, first and foremost, demand kind of, faded a little bit between the June and July periods of this earnings report. But in August, they did see an uptick as mortgage rates continued to decline and started to decline a lot more rapidly throughout the month of August in anticipation of the Federal Reserve's rate cut. So demand in the housing market is being entirely driven by mortgage rates right now. But then he went on to say that, quote, "We are encouraged by this strengthening in our demand for affordably priced, personalized homes." Did you catch that? We're encouraged by this strengthening in our demand for affordably priced, personalized home. Gotta give this guy an A+ for the positive spin zone and the effort that he put into that, for trying to make lower priced homes sound like it's a good thing going forward, but that's largely why the market actually sold off, because the company did see margin pressures as costs are increasing, and it seems like, going forward, there's going to be a lot more home sales that are weighted towards the lower end of the price spectrum, and that's obviously going to hurt margins for these new home builders. Now, it was an A+ for the effort, and specifically margins declined from 11.3% in Q3 of last year to 10.8% this year. Now, that kind of aligns with some other data that we got from Redfin on the day. And that is actual good news for first-time home buyers. This is the first real good news I've seen for first-time home buyers since I've been writing the Daily Peel, to be honest with you. And that is a decrease in affordability. Now, a decrease in affordability means that homes are becoming more affordable. As little sense as that makes, syntactically, it makes sense mathematically, believe it or not here, or at least in the way that we talk about this stuff. Homebuyers need to earn about $115,000, or households need to earn $115,000 to afford a median-priced home in the United States. That is a 1.4% decline in affordability, the first improvement to affordability that we have seen since 2020, so the first one in 3 years. This is assuming, by the way, a 15% down payment, household incomes as well. So overall, affordability is looking a little bit better. And, all this stuff is just going to take a lot of time to work through the market. There are some positive trends that we're seeing from the home buyer's perspective: increased supply, slowdowns in housing price growth. So hopefully this can kind of come to a point of a little bit more equilibrium going forward, and the market won't be completely frozen going into 2025, because over half of you indicated plans to purchase a home in the next 5 years when we were at a survey a couple of weeks ago. So, I'm hoping that it works out for you guys now that I'm a homeowner myself. Probably shouldn't be rooting for you guys, but, I'm a man of the people. What can I say? Let's go ahead and move into some of these big stock movers of the day. So, first and foremost, what's ripe? Well, interestingly enough, Trump Media and Technology Group was a hell of a ripe stock on the day. Shares were up 10.48% on really nothing at all. It's basically just fuck around and find out vibes. This stock trades purely on, like Trump's odds of winning the presidency. It seems like, even though presumably if he does win the presidency, he'll have to step aside, but, at least he can't sell the shares at that point. Maybe that's the positive perspective there. Really no news emerged. The company shares have fallen about 80% from March until Monday, but the stock is up over 12% since Monday's lows, likely because no insiders have been selling despite the fact that the lockup period is over. As a point of reference, the Donald, Mr. Trump, Mr. Orange Man himself owns 114.75 million shares as of close today. That's worth about $1.62 billion. All right, moving on into our next big stock move, we have Hewlett-Packard Enterprise. This is basically the boomer version of NVIDIA. Shares were up 5.05%, and it's definitely the boomer version of NVIDIA today, at least according to Barclays. And also, Barclays just upgraded shares from a hold to a buy on recognition that the growth potential in the company's server unit has the potential to take off. Now, this was news to me because apparently it takes more to make an artificial intelligence system run than just a bag of chips from NVIDIA. And some of the servers from HP Enterprise are kind of looked at as a top candidate to find upside within this market going forward. The thesis rests on accretion from the Juniper acquisition as it's kind of getting finalized and incorporated into the company's financials going forward. Plus the server, the increase in server demand triggered by increased AI workloads. Jesus Christ, my throat feels like it's absolutely on fire. Probably just because I swallowed a spitful of nicotine from these Lucy's that I have in right now. Either way, let's go ahead and move into our stinky, rotten movers of the day. Jesus Christ, will somebody start to play some taps here? Because Stitch Fix, many of you know Stitch Fix, if not for their incredibly cringe-inducing YouTube ads. Stitch Fix shares fell 39.47% on the day. Complete death march right here. So it's kind of similar to how, like a LinkedIn, a Little League coach would say, good cut, even if you missed wildly when you, on the pitch. They're, trying to be encouraging and say, good cut, That's exactly what the CEO did when he said he was proud of the company's performance for this quarter. I don't know how you're proud of an 18.3% sales decline annually, but apparently this guy is. Complete dogshit numbers. There was also a 27% decline in adjusted EBITDA as well as net income. If you're reporting a 27% decline in an adjusted EBITDA metric, there's no metric more gameable than adjusted EBITDA, and you're down 27%. That's fucking pathetic. Retire. Get the hell out of here. I'm not going to say what I was actually thinking right there. Total clients decreased as well, down 4.7% for the quarter and 19.6% annually to 2.51 million. So at least they're monetizing them better because revenue didn't fall that fast, but still very bad sign for Stitch Fix. Maybe, not being naked is going out of style, which, at least among you very handsome and attractive apes out there, I wouldn't mind very much, but for most of the public in the United States, let's keep our clothes on. Anyway, moving into our last stock of the day, our last stinky rotten mover, we have U.S. automakers, and specifically we're focused on Rivian, GM, and Ford. These are companies that have high exposure to the Chinese market. They're also just getting completely fucked on right now. Now, it was really the forgotten Jonas brother was back up to his shenanigans for the day. Adam Jonas, analyst at Morgan Stanley, probably pissed off that, Nick and, what are the other Jonas brothers' names? Joe? Is one of them Joe? Nick, Joe, and that other guy? I don't really know, but this guy, he's probably a little bit upset that he wasn't, out there making those hit songs that I can't think of any off the top of my head. But either way, he came out here and he spent his day downgrading shares of GM, Ford, Rivian on inventory buildup, basically saying these companies have way too much sitting on their lots and they're going to have to reduce prices in order to move this inventory going forward. But also at the same time, there was an interesting dynamic on the Chinese side of things. So the United States just moved to ban just about every car import from China. Everything modern, at least. The cars that contain cameras and semiconductors, anything like that. The United States is basically banning from import into the United States and also Chinese car parts as well in anticipation of retaliatory measures from China. These companies, at least GM and Rivian especially, Rivian's trying to create a market for itself in China. GM has a pretty big presence over there. So, in anticipation of those retaliatory measures, that was even further reason to downgrade shares. All right, let's go ahead and move into our last story of the day before I fucking run out of breath here and have a goddamn stroke. Our thought banana of the day, we're talking about physical Bitcoin. Now, this was kind of a crazy idea to me. It came across as I saw a meme that was describing something absolutely unheard of. It was basically an IRL or an in real life podcast. Imagine going and hanging out with the other trailblazers in your friend group that are, changing inventories and out here being humbled and honored by absolutely everything going on in their lives. Imagine you're hanging out with all of these trailblazers and future titans of the industry, you're, chilling, shooting the shit, having a couple beers, and you're not turning on cameras or microphones to record the wisdom of the conversation. Pretty insane concept if you ask me, but I did see this meme recently and it kind of got me thinking, like, what would a physical version of Bitcoin look like? Because that would be a pretty crazy thing if it existed. Turns out somebody beat me to it. This always happens to me. People always have my ideas before I have them. They steal my ideas before I actually think of them. That's exactly what we saw here. This little thing called gold apparently exists, and it's basically just a physical version of Bitcoin. You actually have to go dig it out of the ground. So, like, I think they call it mining. It's probably named after the process of, mining Bitcoin with your computer and everything. And I guess that's what they call it for gold there too. So stealing ideas from Satoshi and the fellas. But either way, gold prices in this alleged gold asset have been absolutely ripping year to date so far in 2024. They're up 29.45% year to date. That's outperforming the NASDAQ, S&P. Basically, every important equities index in the entire world is getting outperformed by this thing. It's underperforming Bitcoin, obviously, because Bitcoin is the digital version of this asset. Bitcoin at time of writing is up like 42% year to date. Once again, gold is up 29.45%. Keep in mind, when I say gold, just think physical Bitcoin, because that's basically what this is. So this week, it's been every single tick seems like it's setting a new record high, but the actual record high was officially set yesterday at about $2,661. Now, there's a lot of mechanisms that are working here to push up prices of gold. Now, first and foremost, central banks have been buying a shit ton of this stuff to add to their reserves. They are setting new record highs in their total holdings and also record highs in their participation in the gold market, at least according to the World Gold Council. Central bank purchases make up about 25% of all physical gold purchases, double their pre-2022 levels. So central banks are going balls deep in this asset class. Now, 𝗟𝗡𝗄𝗧 isn't exactly a trader, but he does pump stocks to the absolute moon. I hope that he can do the same for gold, because obviously I'm just going to follow all of his trades for the rest of my life. And especially if Nancy Pelosi buys it, holy shit, consider me in. But at the exact same time, individuals have been helping out as well. I don't know if you guys have ever heard of Costco, but the company sells gold bars. And back in March or April of this year, Wells Fargo was estimating that the company was moving about $200 million per month in gold bars. $200 million per month. So what's that on an annual run rate? $2.4 billion worth of gold sales. Holy shit, that is an absolute fuck ton. And at the same time, anytime geopolitical tensions rise, people like to buy up gold because it's, just scary that, like, some countries aren't going to use the US dollar anymore. We're going to go to all-out war, and, paper currency isn't going to be a thing anymore. But that's, the basic idea of it, at least. So there's a lot of mechanisms that are working together to push up the prices of gold. Can it continue long term? Are you guys bullish? Are you buying? Let me know. Shoot me an email again, david@wallstreetoasis.com. I would love to see what you guys' thoughts are. All right, but before I leave you, let me drop some wisdom on you from my boy 𝗪𝗫𝗀𝗪𝗀. Great writer, great author, although a bit of a prick on Twitter, but still his books are certainly worth reading. Check out the 𝗪𝗫𝗀𝗪𝗀 series if you haven't. I recommend starting with his last book, Skin in the Game. It's, at least from my, somewhat non-technical perspective, that was the easiest to read, but the whole series is certainly worthwhile. He said, never ask anyone for their opinion, forecast, or recommendation. Just ask them what they have or don't have in their portfolio. Basically asking them to just tell you what their opinion is with their dollars rather than with their words. So, a nugget of wisdom from 𝗪𝗫𝗀𝗪𝗀 before we hop off here today. That about does it for me. I don't really have anything else to talk about, so I won't waste any more of your time here. And I hope you have a wonderful Thursday, depending on when you're watching this, Thursday entirety of the day, Thursday afternoon, whatever it might be. Hope you have a phenomenal Friday there too, but I'll see you tomorrow night anyway. So, before I see you tomorrow, happy investing, happy trading, and bye now.